Hey team, this is AJ with Trading Trainer on the evening of Wednesday, September 8th with your Trading Trainer Daily Insights. What we're going to do here is take a look at the broad market by taking a look at representative indexes of our watch list, namely the Dow Jones Industrial Average, the NASDAQ Composite Index, and the S&P 500 Index. We're also going to take a look at the New York Stock Exchange Composite Index and the VIX Volatility Index, but before looking at any charts, team, I'm actually going to log into the Trading Trainer Learning Community web portal by going to login.tradingtrainer.com. Once I've logged into the Learning Community web portal, team, I'm going to go to the Daily Insights tab, and I'm going to ask that you go to the Recommendations sub-tab. Please go ahead and click on Recommendations. Look at the recommendations for tomorrow's trading session. Also, please listen to the audio commentary that you'll find there. Pay special close attention to the opening and closing comments. You'll glean a lot from them. In the meantime, let's go to index stats for this particular broad market analysis of this Charts of Interest video series. Trading bias is neutral. Industrial shown by the Dow Jones Industrial Average gained 0.45%. Tech stocks shown by the NASDAQ Composite Index gained 0.9%. And large caps shown by the S&P 500 index gained 0.64%. NYSE volume was heavy, still below average. NASDAQ volume heavy and mixed average. Moving on to our secondary indexes, our 100 best stocks out there shown by the S&P 100 gained 0.63%. Our mid caps shown by the S&P 400 gained 0.66%. Small caps shown by the S&P 600 and the Russell 2000, two different perspectives of small caps, gaining 0.64 and 0.75% respectively. New York Stock Exchange Composite Index gained 0.57%. Volatility dropped 2.31% down to 23.25. Gold fell 0.9%. Oil up 1.45%. Taking a look at our watch list candidate tools, you'll see that no tickers were identified by neither our covered call writing or option trading candidate filters. Moving on to our daily picks report generation tool, we'll go ahead and take a closer look at volume and trends with respect to our indexes. So you can see that volume was up compared to yesterday on the NYSE. Volume was just about the same, slightly higher. On the NASDAQ, very much higher. Still, we're below average. The NASDAQ was about the same as the 50-day average. Oscillators picking up. In fact, the oscillator is very much above the oscillator average with respect to the NYSE volume. Short duration trends are clearly bullish. Long duration trends are neutral. If we go on back to that report menu and take our templates and get kind of a qualitative idea of what's going on in the markets by applying them to the indexes, you'll see that there's not a long enough long-term trend in order to create trend continuation patterns in the broad market. But the short duration trend reversal and trend tests are saying things are bullish. And then, of course, as far as consolidation or even channeling, that's not really happening. So I guess what we're doing is testing a short-term up trend. So let's go ahead and take a look at some charting. I'm going to go ahead and use my user template that has some simple moving averages built into it. And we'll start off with the Dow. And we'll go ahead and expand this to full screen. And then we'll go ahead and take out our worksheet and take a look at some of these different variables that we've got going on here. So here's the Dow, and we see that the Dow recovered a lot that it lost. And again, it's above its 50-day and it's above its 30-day, but it's heading up towards that flat 200-day. There we go. Had a couple of lines on my chart that were going haywire here. So we are currently closed at 10,387, so we're still between our support and resistance levels. The 7 is above the 30-day. No, it's not. And we'll show you why. It's getting there. It's getting above the 50, not quite above the 30, but still it's below both. Coming on back to our statistics here, the 30 is still clearly above the 50. The 30-day is also still trending down. 50-day is still trending up, and the 200-day still is flat. Moving on to the NASDAQ. Our trading bias, we gapped up on open and then continued with an S-bar. Still closing off of the day highs, but look at that spike in volume, which is all telling. It's cool that we cleared our 30-day simple moving average. The next level is up at our 200-day. And the 7-day still is lagging. We did not close above 2,230. 30 is still above the 50. 30 is still trending down. 50 is still flat. 200 is still flat. Let's take a look at the S&P 500. Seven is very close to crossing back above the 50. Not quite yet, though. Again, we opened up. We're off our highs, but we're still made an S-bar today. And we are below 1,100, which is what our resistance level is. And as you can see here, our 50 is still trending up. Our 30 is trending down. And our 200-day is flat. New York Stock Exchange Composite Index. Very much neutral, just like the rest. The VIX Volatility Index isn't quite where it was last Friday, but it did go a little bit down. Closing at 23.25. So what I see that we're doing here, we're still sideways channeling. Let's go back to the NASDAQ. We're still sideways channeling. We're trying to stage a rally and a reversal. We're not going to call it a reversal till we get above this 2,300 level in the NASDAQ. We've got the volume. And I guess what we can say here is the market is still very much being influenced by headlines. There's no internal momentum going on in the markets. They're just investors waiting for headline after headline, and it's up to the majority of investors to determine which headline's most important. So, for instance, today, the worry that affected the market yesterday, which was the European banks not being very strong, today that was overturned by the Portuguese government being able to sell bonds at a very good rate. And that even trumped or did better than the news from our own U.S. Federal Reserve. The Beige Book was published in preparation for the next Federal Open Market Committee meeting, saying that things had slowed down around the United States. So with that said, that news was ignored. The Portuguese news was not ignored. And as you can see here, again, we had with this daily bar, and let's zoom in a little bit on that daily bar, we had a seesaw day. We had the bulls climbing up. We had the bears coming just a little bit back down. So we're off session highs. Basically, we need to be prepared, especially as we get closer to these 200-day simple moving averages. We need to be prepared for further profit taking as well as further gains. Really, it's any market. We need to evaluate our stocks and our option strategies on their own merit. Hey, that's all I've got for you today. Please take care.